Hello, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern, on Thursday, the 26th of April, 2018. Thanks for joining me yet again. We do have good broadband today. It's quite amazing how Comcast treats an issue with broadband they don't recognize. I guess that it's really like heating gas for a home, or as critical as water these days. So it took a lot of coaxing and a lot of inconvenience yesterday. I apologize for the low quality of the video that was posted yesterday because the connection was so poor. I had to upload over my mobile data, and I had to keep the file as small as possible. Hopefully you're able to get something from it. We'll review it. Looking at this morning's action, the market is allocating to risk following the earnings releases from yesterday. The market popped up. The U.S. indices popped up yesterday following the release of several key earnings. You can look that up and that's really what we're trading on. Pretty much everything is positive, except for the U.S. dollar index, which is down 12.5 cents, or 0.14%. The leader today is the NASDAQ, of course. And we are looking at some more important earnings today. Amazon after the market, Intel, and Microsoft. So look out for those after the close. Currently, the ECB president, Draghi, is having his press conference, so pay attention if you're trading European products, or the 6E, or the euro, any euro pair really. Initial claims, just as a note, initial claims today came in so low, it's the lowest it's been since 1969. Initial claims. So let's jump right into it and look at what was expected yesterday. Again, you'll have to excuse the resolution of this image, but it is what it is. At least the broadband issues were fixed today. For today. This is the primary scenario. The expectation is we pull back and then continue lower and pop back in. That's the primary expectation. Treating Tuesday's trading as impulsive down, so we're looking for that low to be taken out in this sort of classic fashion, given the volume that went off in the lower end of the profile. That seemed like the higher probability scenario. The secondary scenario, which is pretty much exactly what worked out. The secondary scenario is that sellers step right in, take the market down, put in a new low against the stock zone. It's lower down there, and then pop right back up to 26.45. Did I have 45? No, 26.38, I think, is what I estimated here. Here's what actually happened. There's Tuesday's sell-off, and then we immediately push into the next stock zone at 26.12. Hit right into the center of the stock zone, and then we pop right back up to 34. Consolidate at the next stock zone up 21. And then we push into 38, which was the next stock zone up, and so on. And then we end up finishing at 26.45 at the high stock zone as 26.45 quarter. Where does that stock zone come from? The key LVN right here, and some stuff from the past. Yes, a reminder that derivatives trading involves substantial risk of losses, not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you, Max. So that's what we had yesterday. That is scenario 2 on the dot. Pretty much. I don't know how you guys looked at things, but yesterday was some pretty decent trading. If it was difficult, then it's just an opportunity to look at what areas need improvement. We all lose. We all lose. It's just as traders, we just get pretty decent at losing. And so some days, as good as it is, the market just doesn't give you what you are betting on. It's just part of the process. But yesterday's rotations were really, to me at least, were very clear, and I narrated a lot of it as much as I could from about 10:30 Central onwards. I narrated the trades that I was looking at and why, and they mostly worked out. The overnight session, we reopen right when we're right above where we closed, and then we gap up at 5 o'clock Central, which is when today's session started, 6 o'clock Eastern, 6 p.m. Eastern yesterday, and then we pushed higher. Now, again, this is on earnings. I'm going to show you just what the volume scope looks like. And you could see here, this bar had pretty good delta on it and pretty good range. But this bar, you could see the single digits there, the very, very thin trade. And mostly it's been, the overall delta has been selling delta, even though it's popping higher. So overall, this, to me, I didn't trade this. I wasn't here for this. This overall looked weak. It looked like a weak pop. So we got this sell-off that we see here. And then as we get the sell-off, the interesting part, and the reason I'm showing you this chart, as we get the sell-off, we have positive delta on the sell-off. As the market goes lower, each bar gives you higher and higher, positive delta. So as the market pushes lower, there's buying and buying and buying that goes on. So you're looking for the second reversal. This, I didn't trade this. I did watch it. And it just, it continues to hold its own. It looks relatively controlled by the buyers today. So that's really what I'm looking for this session. What are we expecting for this morning? This morning, we're opening up right in here. We have an open auction out of range. We're opening, so this is the opening bar right here, or where we are currently. We have this thin range that we're in the middle of. We've done a good job of forming a base beneath us, down to 38.39. 38.39, and so the expectation for today is an open auction that responds downwards. Now, the overnight inventory has been long, mostly, and by price, and positive by volume. The overnight inventory is about positive 4,000 or so. I think that. Let me see what it is actually. Just a quick 5,600. So I'm looking for that to rebalance a little bit. A test of 45 is expected. The market could push, the ES has some room to push down into the 38 area again. But I'm expecting it to base at the 64 and then start to reverse up. I'm looking for a test into the upper end to push through this thin zone and to push into this 2667 area as a key target on scenario 1. So scenario 1's looking for a drop. And as it drops, I'm watching for how it prints to the downside. Is it dropping on relatively weak negative delta, or even better, it's dropping on positive delta? Gives us an opportunity to lean against the bids, get long, and look for the rotation back up through the open and so on. That would be the most orderly, and if this is an orderly auction, which it has been since the flush on Tuesday, This is the highest expectation play so far. So we formed a base. You can see 2 days of bases here. Notice yesterday's point of control. So the prior day's point of control is right here. This line. Point of control for the prior day was 26.33. And yesterday's point of control is 26.32.50. So what we have is two overlapping points of control. And that's really, the market really found value in this range between about 39 to about 21, and we are above it. So I'm looking for that as a base currently. Earnings are very strong so far, really good results for the last quarter. On the underlying equities, I'm looking for this to base. The caveat is the Treasury, the 10-year note, and the 3% yield that we keep pushing up against, which supposedly fed some of this Tuesday drop. But earnings is what we care about more, and the expectation and the way the way the analysis is setting up. The way the analysis is setting up, it's looking like it's likely to push through to that 26.67. So that's the main scenario. Now the secondary scenario, we open up right here on this 26.51 stock zone. We have an open auction. We attempt to push higher. We start to move into the range, and if we do, I'm looking for consolidation in the 39, 38 area and a test of 33 before we move back out of the range and start pushing higher. And in that situation, 26.67 is not likely. We're more likely to hit the 26.57, which has a fair amount of confluence. This area here has a fair bit of confluence. It is the LVN of the drop. It's the low from Monday. It's also close to the low from Tuesday. It's from a Friday. It's also the weekly low from last week, and so on and so forth. CMC point of control, and that becomes a magnet, becomes a big area to tangle with, right? So that's where we are. Okay, so that's the chart with the stock zones on it, and that gives me targets. So overall, those are your main plans for the day. The third plan for the day is an open test drive. I'm not seeing that as a big play. Open test drive. We have an impulse up, consolidate for a while, and then continue to drift higher. An open test drive gives us higher targets. We start to push towards 26.73.50, 26.73.50 area as a key target and consolidate. Okay. The gray areas that you see here are the stock zones. Those are the areas where I'll engage with the market. Those are the areas I watch. So if I have a long bias, then I'm going to engage in a stock zone. I'm not going to engage in the middle of nowhere. That's what you're seeing there. And these other lines, these lines are called flex levels. And these are just bigger picture profile and other areas to pay attention to while the trade is taking place. Okay, so that's that. Good luck today, and I'll catch you tomorrow morning. Take care.